beanstalk's goose that lays golden eggs. It's something that pays you every month, whether you're working or not. Sounds great, doesn't it? And helping you land that prime real estate that keeps on giving is Nagraj Anaya, your trusted Bay Area realtor and the founder of nagrajhomes.com. Namaskar, Bay Area. I'm Vijay Lakshmi. Welcome to another brand new edition of Real Estate Roundup. Your chance to get caught up on what's trending in real estate. Join us in this conversation as I get talking to Nagraj with your questions, concerns, and observations of the Bay Area real estate market today. Whether you're looking for your first home or you're a veteran in this space, we are looking forward to hearing from you. Studio lines are open on Bolly 92.3 FM. That's Bolly 92.3 FM. It's 408 912 5038. 408 912 5038. And we're also simulcasting on YouTube, on Nagraj Aniya's YouTube channel. You can catch us there as well and put your questions in the comments section. And with that, let me welcome Nagraj. Happy Sunday, Nagraj.
Hello, Vijay Lakshmi. Happy Sunday to you and all the listeners out there. Hope
Uh-huh.
you guys are having a wonderful Sunday.
Yes.
I think you started with very well goose, right?
Jack and the Beanstalk's goose. Hmm.
I think for that one, I have one very good example. I was talking to one of the Silicon Valley Bank employee yesterday.
Hmm.
You know that how the Silicon Valley Bank transition happened, right?
Yes.
At
Hmm.
one point of the time, Silicon Valley Bank used to do it really good, and the stocks were for a $700. Okay, after the issues, whatever happened from the last 2 months, the Silicon Valley Bank stocks, everything was seized. The federal base basically take it over, right? But he was telling, I was asking, did you lose all these stocks, right?
Hmm.
He had a lot of investments in the stocks, right? He told me, Nagaraj, at the right time last year, I bought the house.
Hmm.
So that is why I didn't have any stocks.
Yeah.
I didn't lose out anything.
Uh-huh.
Okay. So the diversifying the portfolio, if you had kept the stock only as stocks as an options, right? You would have lost everything when the stocks fades out.
Okay. Yeah.
So now real estate turned out to be a goose for him, right? Like
Yes.
it benefited,
Yes.
right? So it is always investment should be diversified.
Hmm.
It should not be at only on the stocks or leave it only on the real estate.
Yeah.
Diversify your portfolio. That's where we do the show for you guys. So any questions on the real estate? We are live now. Do please give us a call. We had no question is a small question.
Yes, like we always say, no question is too big or too small. So just call in with whatever's on your
It
mind.
might be repetitive also. That's
Yes, that doesn't matter. And, it helps the community at large when you voice your question. So the number in the studio is again 408 912 5038. 408 and live on YouTube. If you go into the live section on YouTube and check out Nagraj Anaya channel, we are right there, and you can also put the question there. And Nagraj, great insight into diversifying
yes.
your portfolio with real estate. And talking about that, real estate is actually again the top investment choice, for typical Americans. And I mentioned this even last time. The property has been number one in a Gallup poll for 11 consecutive years, and 34% respondents of 1,000 folks, they said that property is the best place for their money when they're asked to choose between real estate, stocks, bonds, gold, and savings accounts. So it's always considered number one. So if you're looking at investment options also for real estate, Nagraj can help you there as well, nagrajhomes.com, and something to consider, and to spread the risk around, right?
Yeah. Let me start with that's well said. And let me start with this weekly update, right? What's
Mm-hmm.
happening around?
Yeah.
Because the reason we start with the weekly update or like try to tell you, mention the news, it's
Mm.
because all are well connected in the Bay Area real estate. Like, for example, what's happening in the AI or
Mm.
what's happening in the Meta or what's happening in other places, right? It's all interconnected in the Silicon Valley, right?
Yes.
See,
Mm-hmm.
Meta has said from September 4th, they're canceling the work from home.
Mm.
Until now, Meta was saying oh, we are okay to work from home and everything, right? Now they're asking for come back to office 3 days a week,
Yes.
right? And AI, May's update, right? First time they came out and saying that Apple AI took the 4,000 jobs away, right?
Okay.
It was due to a layoffs or due to a 4,000 due to a AI, right?
Mm-hmm.
So the reason what I'm trying to tell you is, see, Meta's work from home canceling, it will affect the real estate surrounding areas, right? So whatever the Meta companies, wherever there are like surrounding that areas, it starts impacting. The
Mm-hmm.
prices starts going up. That is the reason from the last January. One of the reasons you can see the prices are going up. That is a, one of the reason.
I see.
Work
Uh-huh.
from home is getting cancer.
Yes, across the board, they're transitioning to
Yeah, there is
coming
one more
into work
article.
in person.
Was
Mm-hmm.
one more well article was I was reading about all the employees needs to go back to the work for to be more productive,
Mm-hmm.
not
Yeah.
staying in the home more, right?
Yes.
To even to get your salary hikes or like to be a productive, they are
Salary and sanity.
everything.
Sometimes you need that water
Yeah,
cooler conversation. You miss that, right? So
true.
going into work is actually welcome by some people. Of course, they've gotten used to being home, but the balance between the two, I think, is
The
ideal.
work from home has done wonderfully well for the women, right? It's
Mm-hmm.
impacting them not to work
Yeah.
because they need to take care of the family, they need to take care of the kids.
Mm-hmm.
This work from home has helped them to do more,
Tremendously.
right?
Mm-hmm.
They can balance.
Yeah.
Always we know that women can balance, but this has helped them to even work also now, right?
Mm-hmm.
Even contribute to the economy. This has been very beneficial, no doubt on that.
Yeah.
But in a weekly, 2 times or 3 times, collaboration in the team makes a difference.
Right.
That's what the experts are calling it out.
Mm-hmm. Mm-hmm.
And one more update is on the multi-family homes, right? If you're in a single
Yeah.
or not married, especially these multi-family homes are a great investment opportunity. One of my clients recently bought in a Santa Clara. The house was like 1.45, and he's just doing like what 10% or 12% down, right?
Mm-hmm.
He can stay at one place and he can rent out the other property,
Oh, okay.
right?
Uh-huh.
It is a two bed, one bath on multifamily homes. See, always don't compare the multifamily homes to a single family home. But if you're thinking about you can't make that major monthly payments, right? Then this can be the alternative options, multifamily homes, where it can one can basically pay you 30% or a 35% of a rent.
So is this like a single family or like a
It's a
condo?
duplex, like it's a basically a
Duplex.
duplex. Each would be a two bed, one bath, two bed, one bath.
Mm-hmm.
And one is like one family can stay, or the owner can stay, or the buyer can stay, right?
Mm.
Other one they can rent it out. That can be a great source of an income when it is very difficult for you to pay the monthly payment right now.
Right,
Take
right.
anything right now, if you're doing less than 20%, your monthly payments are close to 7,000 or $8,000.
Mm-hmm.
That's a huge without including a property taxes.
Yes. Mm-hmm. Yeah.
You need to, so do please watch out on the multifamily homes.
That's a great suggestion.
Yeah,
Yeah. Mm-hmm.
especially it's really helpful for this not married persons or a single, right? Like instead of renting it out, this can be a greater source of an income for them.
Mm-hmm. Absolutely. So actually on that thought, let me give out the number to people who
Yeah.
are trying to get in this conversation, 408-912 5038, 408-912 5038 for anything that's really sparked your interest and you want to discuss that with Nagraj. This is the time to do that. And of course, nagrajhomes.com is the place you want to be to initiate all of your home buying journey. Nagraj loves to help people find the home of their dreams. So whether you are a first-time home buyer or you're an empty nester looking to downsize, Nagraj has the experience that you need to find a home in Silicon Valley. So don't hesitate to reach out, nagrajhomes.com, or call us right now in the studio. Studio lines are open 408-912-5038, and also live on YouTube, Nagraj Anayya's YouTube channel. You can check it out there. And if you miss any part of this conversation, you can always go back to YouTube and we have it all there. So you can check out that as well. So Nagraj, wonderful update right there that you had, for people. And one question that I wanted to know is, what happens when you are in the process of buying a home and you find yourself simultaneously switching jobs? Because in the past few years, it seems like, of course, switching jobs is a regular thing that's happening. And according to the US Bureau of Labor Statistics, they mentioned that the number of quits meaning defined as the voluntary separation initiated by the employee, that was 4 million in February 2023. So, the question really is, what happens when you're in that tricky state of actually changing jobs, switching, and you're buying a home? How does that impact that? And how do you maintain that?
No,
Mhm.
it's really a great question. Okay, always is an advice when you're in the buying of process of buying a house, right? Or you're in a contract, or you need to put an offer. Always advise not to change your job, right?
Okay.
As
Uh-huh.
soon as you change your job, all you unless you're doing a lot of down payment, your resources are so good,
Mm.
it's okay. But if you're relying on the single income, or you're relying on where the monthly debt to income ratio is like you're relying on the RSUs, or
Mm.
you're relying on the bonus,
Yeah.
right? So when you're changing the job, it really impacts and it slows down the complete loan process. So it's advised not to do it. If you want to do a job change before buying a house or after you buy the house, not
Mm-hmm.
during the process. But if some unexpected things happens, there are workarounds for that. For example, instead of going into a traditional income qualifying, you can go based on the like 12 months only bank statements, where you need to do a 20% down payment, or sometimes even a higher.
Mm.
But be noted, always your monthly payments would be higher because your interest rates are going to be higher. You are not qualifying into a regular FHA loans or like
Mm-hmm. Mm-hmm.
regular loans, right? You will be going with an untraditional loans. So that is why the interest rates would be higher.
Okay. Uh-huh.
Okay. There are workarounds for that, but always not a regular loans for you.
So it's preferred that you just go through the process of the home
Yeah.
buying and
Yeah.
then you transition if you want to change jobs and things, right?
Because typically, once you go into a contract, it is taking on 20 to 25 days,
Mm-hmm.
sometimes even a 15 days. Okay. During the process of your loan, lender would be calling the company where you work or the employer to
Yeah.
to know how long he is working and is he really working in that company. All the
Yeah.
background check would be done by the lender.
Mm-hmm. Correct. So he needs to have that. So if you sort of switch in the middle, then it's kind of iffy, right? Going from
Yeah.
one to the other.
Otherwise, going to second companies again depends on what is the income ratio he is in. And even for example, when you're qualifying for the, as I told you earlier, if you're qualified based on the RSU's income also,
Mm,
RSU's income is considered for the last 2 years if you're in the same company.
I see.
If you
Okay.
change it, then the RSU's is no more valid for him.
Right. Right.
So
Okay.
the qualification itself will be, and again, thing is like that lender might not have your traditional loan programs for you. It's only a bank statement loans or something.
Mm-hmm.
Then you
Mm-hmm.
need to be basically changing into a different lender.
Yeah. Mm-hmm.
So overall, the process gets delayed.
Delayed. Right. Right. Right.
If you're in the contract, it's typically would be mentioned in the contract how many days to a close. It would be a 15 days, it would be a 20, 25 days. If you don't close in a time,
Mm-hmm.
there are two things can happen. I
Hmm.
think meanwhile, let's give out as a give a some
Yes. Yeah, so folks, if you're just joining us, I'm Vijay Lakshmi speaking with Nagraj Anaya, founder of nagrajhomes.com, helping buyers and sellers achieve their lifestyle dreams in the Bay Area. And so you too can bring Nagraj's experience and dedication to work for you in real estate. Just reach out to him. It's nagrajhomes.com. That's Nagaraj homes.com, and he'll be happy to help you, handhold you through the process, whether you're buying a home, selling your home, or you're looking to invest, whatever it is that you're looking to do in real estate. And while we have, you're listening to Real Estate Roundup, where we discuss what's hot, what's happening, what's trending in the Bay Area, but also looking for your participation, your observations. Give us a call in the studios, 408-912-5038. That's 408-912-5038. We'd love to hear from you. And if you have any questions in the mind, what we've talked about so far that has triggered any kinds of questions, feel free to call in and talk to the subject matter expert in real estate, and that's Nagraj Anaya right there. So Nagraj, great, a suggestion there to just stay put while you're doing this tricky maneuver of buying the house. So don't float in too many boats at that time.
Yeah, yeah. So, and as I was explaining you on the closing dates, right? Like in the contract, you would have mentioned is a 15 days or a 20 days, the
Mm,
closing.
mm,
If you don't close in a time, the seller might give you basically a letter or saying that you right to perform, right? You'll be
mm.
sending you a document saying that right to perform. That right to perform is within a 3 days, right? If you don't perform within a 3 days, or the number of days is usually it's a 3 days. If you don't perform within a 3 days, then it's every possibility that cancellation, the contract gets cancelled now.
Oh my gosh. Okay. So you
So,
don't want to risk that. Mm-hmm.
so in that case, always the buyer agent should be updating what's happening on the loan status to the seller agent. If something unexpected things happens, right?
Yeah.
Is keeping informed to the seller agent and working around, like basically to extend the dates, or like extend with the talk to the seller, like, right, like, so that sometimes the sellers are also cooperative. I
Mm-hmm.
did seller I got to work like basically 3 months back when I was working in San Jose.
Mm.
Okay, 3120, like basically it's in a very good property in a
Yeah.
good segment. We went into a contract, but when it's about to close, we came to know that loan can't be funded for this property.
Oh, okay. Uh-huh.
Reason is there was a building code violation. Okay, when there is a building code violation, lenders would not be able to lenders can't lend them money, because always the building code, right, like especially from the counties, they will have the higher hand when compared to the lender, right?
Mm-hmm.
They would be a second lien. Okay,
Yeah.
that is the reason the most of the lenders would not be able to perform it.
Mm-hmm.
So we
Oh,
almost
okay.
took it 2 to 3 months,
Mm.
close the loan. But what happened in such a in that long journey, right? Like we
Yeah.
always keeping informed to the seller what's happening and what are the reasons we are extending it.
Keep him informed. Yeah.
Yeah. So
Mm-hmm.
keeping them informed would be really helpful during the loan process. So that would be so. Coming back to your original question, it's always advised not to change your job.
Mm-hmm. Not to
Unexpected
change it.
things happens. There are some workarounds, but
Yeah.
it would be a lengthy and it kind of an expensive for you.
Mm-hmm. So, folks, have you come across a predicament like that you were interested in buying a home, but at the same time you're switching jobs? I mean, we'd love to know. 408-912-5038, 408-912-5038 on that or any other thoughts on your mind with regard to real estate. We'd love for Nagraj to help you really land your dream property. And keep those questions coming in. Also live on YouTube, Nagraj Anaya's YouTube channel. You can also put your questions there in the comment section. And so, Nagraj, one report that just came out, and I thought I'd bring that up, is that owning a home in the Bay Area today now costs more, twice as much as renting one. And that is the largest disparity of any major population center anywhere in the country. So, for example, in San Jose, the monthly mortgage for a typical newly purchased home is an estimated $11,049. that is a 165% premium on the median rental price of 4,176, this report found. So, I wanted to segue this question. While most people choose to rent and forego that home equity uh, because of different reasons. They may not plan to stay long term in the place, or they may not qualify for a mortgage, which is increasingly the situation now because of the rising mortgage prices and elevated home prices, or they may not be able to afford a down payment, and they are under the impression that the down payment has to be 20%. So I'd like you to talk about, it's not necessarily 20% that you have to fork out, right? It can be lower than that, and they could still sort of go in for that home that they're looking at. So that shouldn't be a stumbling block in their way in terms of the down payment. So talk to us a little about that. The 20% golden number, is that, sacrosanct, or can you get
See,
lower to that?
I think we have, I informed you for a few times on this also. We had discussed also, right?
Yes.
Never be thinking that it's a 20% is a minimum required, and you need to wait until accumulate the 20%.
Mm-hmm.
As you said, rentals also have gone up from last 1 year,
Yeah.
and even the home prices has gone up because of the higher interest rate. Rentals used to be a 2,500 last year, but the same property now is close to a $4,000. It's a $1,500 has gone up. Okay.
Mm-hmm.
But when you're buying a house, the monthly payments might be higher now, but the next 2 years also you can consider that if you buy a house, you are going to pay for next 2 years a higher interest rate, because you're locking in for the higher interest rate now, right? You
Mm-hmm.
need to
Mm-hmm.
be waiting until the rate goes down, right? Typically, to go to the rate to go down, we're expecting 1 or 2 years depending on the market conditions. Again, correct?
Yeah.
So
Yeah.
in that case, let's assume you're paying a 2,000 every month. It's for 2 years. The worst case you would be paying is a 48,000.
Mm-hmm.
Correct. But in the rental, you are already paying 5,000 into 12 is a 60. Into 2 years, it is a 120K.
Right. Mm-hmm.
Okay.
Yeah.
So that everybody knows, since it is in a higher interest rate, purchases are a bit less, but even the less inventory is also one of the reasons, correct? But as soon as the interest rates coming down, lot of investors and everybody starts jumping in. Again,
Mm-hmm.
the prices starts going up very crazy again.
Yeah.
Coming
So
back,
yeah, 20%. Mm-hmm.
there is no need of 20%. Until a 1.5 million, there are lenders who can do even with a 5% down.
Mm-hmm. Okay.
And even a 10% down. Okay. And anything more than 5%, they're okay.
Mm-hmm.
If it is less than a million, purchase price 3.5%.
Oh,
That
wow.
three and a
Okay.
half percent is the down payment. What is the difference between
Yeah.
people who is doing a 20% or a people who is doing a 5%? Is the PMI component,
PMI is?
private mortgage insurance. So
Mm-hmm.
that is like typically that number or a value goes based on the how is your credit score. If
Mm.
your credit score is good, it is basically a separate lending, separate insurance which is taken to protect if you don't perform it, right? So it was basically taken from the lender buys on the separate mortgage company for the PMI.
Mm-hmm.
So that is like typically to 150, $200. And again, depends how is your credit score. Your credit score is bad, it will be going up. The numbers would be going up. So that is a one of the way, get the PMI. The second one is split your loan. Instead of becoming like, instead of like 80%, right? It would be like 10. For example, you're doing a 10% down. The second loan would be a HELOC loan. That is in a 10%. It's an
Ah,
interest only loan.
I see.
Anytime you buy a house, a minimum 20% is needed.
Mm.
If you don't have the 20%, you should be paying in a PMI, or you need to be buying in a second loan. The second loan can be an interest only, it can be on a principal and interest only, right?
Mm-hmm.
But that interest values might be not the traditional interest rates. It is typically goes based on the current market conditions again.
Mm-hmm. I see.
The monthly
Okay.
payments going with the second HELOC option would be, your monthly payments should be higher compared to PMI.
Mm.
PMI, you know that your monthly payments are like always fixed. It is not fluctuates depend on your market conditions. This 10% difference, whatever you have borrowed, that will vary based on the market conditions for you.
I see. Mm-hmm.
So that is why
Okay.
you should be careful which loan program to do it when you're doing a less than 20% down.
Mm-hmm. Right, right.
So a lot of times, one more reason is like, see, a lot of times you might have a 20% down, but when you purchase in a house, you might know, you might have put in an offer more than the expected, right? More than the appraisal value. For example, your appraisal comes out lesser than the purchase price. If you don't have more than 20%, right, or you don't have enough liquidity, so
Mm-hmm.
what you can do is reduce your, increase your loan amount and make the difference of that.
Uh-huh. Increase your, say that again, please.
Basically increase your loan amount, right?
Mm-hmm.
Instead of, like, for example, you bought a house for, purchase a house for a 1 million, right? Like, but appraisal came off in a 900K. There's an 100K difference for you.
Yeah,
So
right.
you, so for 900K, you would be doing a, maybe you can do a 10%, right? So then the remaining 100K would not be given from the lender. So that's an extra money coming in for you.
Mm-hmm. Oh,
It
okay.
would be like 100 plus
Yeah,
90K down payment for you.
right. Oh, okay.
So that is
Oh.
very, very important when you're purchasing in house. Like when you put in an offer, make sure what would be your value of the house, where what you're putting in. If you're putting in a more, then the purchase, whatever the banks are like, or the appraisal coming in around in that area. So you
Mm-hmm.
should be basically arranging that difference.
Mm-hmm. Okay. Wow, that's a wealth of information right there, and a very informative session. Of course, people would have found it. I want to give out your number. It's 408-805-4653. 408-805-4653. You can get in touch with Nagraj if anything of this has sparked interest in you. You want to talk more about it, or the way to go is nagrajhomes.com. And Nagraj, thank you so much for all that you're doing for the community. Appreciate it and looking forward to next Sunday as well.
Thank you so much. Have a wonderful day.
On that note, this is Vijay Lakshmi. Thank you so much for joining us. Until next time, mark your calendars 12:30 to 1 p.m. only on Poly 92.3 FM. Until next time, have a wonderful week ahead. Namaskar.
Namaskar.